I'll be talking a little bit about the Labuan legal framework for Islamic finance and structures, and then I'll go into two of the structures used when it comes to structuring for high net worth individuals. Is the Labuan Islamic Trusts and the Labuan Islamic Foundations. I think many of you know Labuan. It is located not too far away from the island of Borneo. It is part of Malaysia, and its laws are considered part of the it is part of the Malaysian legal framework as well. It has repositioned itself recently to become an international business and financial center. And in relation to this exercise, in 2010, there was a major revamp of its legal framework, where some significant changes in the legal framework and introduction of new laws were done. It has seen some impressive growth in terms of the companies, banks, insurance, takaful institutions that has been set up. It has seen also an increase in fund management companies, trust companies, and foundations. Some of the statistics are given here. When the law reform exercise was done in 2010, it took the opportunity to introduce some structures that were not available at the time and tried to update its offerings to match some of the other centers. But one of the most unique propositions of Labuan is that quite early on it identified that there was an increasing query and interest from Muslim high net worth individuals. There was also an increase in the Islamic financial services it could offer, and so as it worked on its legal reform, it decided to have a distinct and separate Islamic framework, and therefore it introduced laws specifically for Islamic finance, and in this omnibus encompassing law, it included structures and matters relating to Islamic wealth management that could be taken advantage of by advisors and high net worth individuals who are interested. So I'll be looking a little bit closer at the Labuan Islamic Financial Services and Securities Act. This is the omnibus Islamic law that I was talking about. And under this law, there was included provisions for Labuan Islamic Trusts and Labuan Islamic Foundation. So this is new. This is not actually available in other international centers around the world. There are other structures that you could explore on your own by going to the Labuan website. Now it has the Protected Cell Company. It now has a special trust. It has limited liability partnership, other structures that could be explored. When it comes to trust and Islamic trust, it is flexible and accommodates various types of objectives. You can have charitable trust, non-charitable trust, purpose trust, protective trust, and so on. So the Labuan Islamic Financial Services and Securities Act, which I will call LIFSA, well, one of the matters that is important to Labuan is to create a regulatory framework that will give confidence to parties who want to set up Islamic businesses, an Islamic bank, takaful company, an Islamic fund, an Islamic partnership, an Islamic company in general. And in order to do this, one of the main requirements of the law is that it says activities under this act must be carried out in compliance with Sharia principles. And there are provisions in the law that enable Labuan FSA to help ensure this and set in place the checks and balances for ensuring it. So it is an omnibus-specific legislation for Labuan Islamic businesses. Section 6 says any person carrying on any activity under this act shall ensure that such activity shall be in compliance with Sharia principles. LIFSA has specific provisions for Sharia governance, including Sharia Advisor requirements for the Labuan Islamic Trust and Labuan Islamic Foundation. So if you want to start, let's say, an Islamic window for your bank, let's say in Labuan, you establish this Islamic operation, then you may declare that it is Islamic Sharia compliant, your products and services, but anyone can say such a thing unless the law sets in place the requirements for Sharia oversight. So Labuan laws and guidelines lay out the requirements for Sharia Advisor for an Islamic bank or takaful or an Islamic fund, or if you want to issue sukuk or Islamic securities out of Labuan, then you need to have Sharia Advisor requirements. They vet the documents and the structuring and the terms of the issuance. Similarly, for the Labuan Islamic Trust and the Labuan Islamic Foundation, there are settlors who are very interested to have trusts that are run in accordance with Sharia principles. Their beneficiaries might be interested in benefiting, getting income only from Sharia compliant operations. So the laws set in place the Sharia oversight and governance for these entities. One unique feature also of the Labuan legal framework is that it establishes the Sharia Supervisory Council of the Labuan Financial Services Authority. Now this council, which I will call SFC, is the ultimate authority and reference on Sharia matters in Labuan. This is very important because, as you know, when it comes to Sharia matters, there are many interpretations of Islamic law used in Islamic communities around the world. So for the Labuan legal framework, Labuan decided that for our businesses, for our entities, for our operations that we are going to supervise, the SSC will provide the Sharia guidance, will have the ultimate say. And if you have some Sharia uncertainty, you can refer to the SSC and their guidance will be decisive in determining the state of Sharia compliance of that product, service, aspect of operation and so on. There will be regulations that you'll have to comply when we talk about setting up in Labuan. We'll have to look at the regulations under the acts. So for example, for the LIFSA, there will be the LIFSA regulations. They will provide you with the forms, very clear on the website if you have time to go. And they will provide you as to the list of the fees as well. There will be guidelines that you'll have to review and you'll have to comply with. So these are some of the guidelines if you're interested in setting up an Islamic business or entity in Labuan. Directive on Islamic financial business, guidelines on takaful, Sharia compliant pure captive, guidelines on establishment of foundations including Islamic foundation. This circular on the appointment of an internal Sharia Advisory Board, Sharia Advisor under LIFSA, gives some clarification as to the practice of appointing Sharia Advisors. Format for submission of Islamic financial products, and the one in red is something that had just been issued just a few months ago. All of these are available on the Labuan website. The Sharia Supervisory Council that I mentioned just now, it ascertains Islamic law for the purposes of any business regulated by Labuan, issues a ruling or advice upon reference to it, advises on any Sharia or other functions determined by the Labuan FSA. Sharia principles includes principles and concepts of Islamic law as approved or adopted by way of rulings or by any other means by the SSC or the Internal Sharia Advisory Board of Labuan Islamic Bank or Takaful Operator or a Sharia Advisor of any entity regulated under this Act as the case may be. So if you set up, let's say, a Takaful window, you can have a conventional insurance that has an Islamic Takaful operation. You will have a Sharia Advisor as required by the regulations. Now, your Sharia Advisor or Sharia Committee will provide the Sharia guidance, but if you have uncertainties or disputes, you can raise that to the SSC and they will give the definitive Sharia guidance. A Sharia Advisor, this is defined by the law to mean a qualified person appointed by a licensed entity pursuant to this Act to advise on matters relating to Sharia principles. And when you say a qualified person, one of the qualifications is that he or she must possess the necessary qualifications and expertise in Islamic commercial law or Islamic jurisprudence, and includes a corporation having in its employment at least one individual meeting the criteria mentioned in paragraphs A to D. So you can have, for some entities, you can have a lone Sharia Advisor or you can have a Sharia advisory firm. So the point is, what Labuan wants is Sharia certainty and sound Sharia governance under its legal framework. Now, in relation to our work in the last several years, we've seen more and more high net worth Muslim individuals coming to us. In our assessment, we think that the Muslim high net worth individuals were a bit more slow to come to us to explore options and structures. It is only lately we feel that many of them embarked on this exploration of options other than Islamic inheritance rules. Many of them think that they have no other recourse and that the default position is leaving it to the estate and for the Islamic inheritance rules to apply. So one of the things that we have been doing is advising them on the law, on the Sharia law and the Sharia principles as to what are the mechanisms they can use to structure something that fits their objectives. And it has been a journey in the last several years for them to discover that it is not, they are not limited to only looking at the estate and having it distributed according to the strict Islamic rules of inheritance. This is a matter that would, when you talk about the laws applicable to a Muslim high net worth individuals, you don't just look at Sharia principles, the universal Sharia principles, but you need to look at the applicable laws as well, and where the person is situated, where his assets are situated. When you talk about Malaysians, for example, we need to give advice based on the multiple laws that incorporate Sharia principles in our country. So we will start with the very basic. Many of them do not even have the most important and basic documentation, the will. Under Malaysian law, and I think in many countries as well, it is very important for them. If they do not look at any other option at all, they need to start with a will. Because without a will, if something were to happen to them, if they were to pass away, then they will have to go for the other option, and that is to apply for letters of administration. There is a big difference in terms of cost, the length of legal proceedings, and potential for dispute when they leave matters not specified in a will, appointing an executor and leaving it for application of letters of administration by one of their family members, for example. So when they come to us, this is the question that they will ask. They say, I am someone with a lot of assets. I do know that I have to do something, but I'm not quite sure what. I do not have any documentation in place, so I would like advice as to how do I start, what I can do. And some of them will just say that, but some of them will come with some specific problem in mind. So they will say that I have daughters and sons. Are there ways that I could ensure that my daughters receive equal to my sons? That is one. Some will say that this is the problem. I'm having a very hostile relationship with my children, or I have multiple wives and so on, and this is my objective. Or I have an autistic or daughter with Down syndrome, only one sibling is taking care of her. I want to make sure that there is enough provision for this daughter to help take care of a sister, once my wife and I are gone, and I want them to be with adequate resources compared to these other siblings who do not take care of the daughter with special needs. Some of them say, I have built this business for 20 years. I would rather that it does not disintegrate after my passing. Are there ways that I could preserve it so that preserve it in a way that takes into account the nature and situation of my family and the interests of my children. My children are still young, so I do not know which one of them will handle the reins of the business. So what can I do? So these are some of the things that we take a look at with them, the family situation, the assets that they have. Those families that we consider as being a bit high risk, potential for challenges to some structures are very high, then there's some sort of advice and documentation that we put in place for them, more than the what we call low risk type of families. So this is what they're looking at. When they come to us, advisors, they look at distribution. To what extent can I do this? Is it truly Sharia compliant if I were to put some assets in a trust or a foundation and have the terms in a certain way? Can I do that as a Muslim? They will ask that. So succession planning. I treasure my business. I really want it to last for as long as possible. I want it to benefit even my grandchildren and great-grandchildren. Okay. Preparation for exigencies. Some of them know right now that with the size of the assets that they hold, they can't afford to be without some preparations. And when you consider trusts and foundations to hold their assets and manage their assets, their advisors can hit the ground running should they suddenly pass away and so on. Preparation for exigencies, preservation, efficient management. So now they could consider trustees, managers and so on the moment they set up a trust and a foundation, because sometimes their wives, their children are not educated, are not financially savvy, so they need to have trustees and advisors in place who could help them manage it. And they could go on a holiday if they're sick. If something were to happen to them, these trustees and managers can help see to things and make sure that the wife and the children is continuing to get the dividends and profits and so on from the business. Expertise, so they want the expertise from certain types of people, like I mentioned just now, including Sharia advisors. Charity. They sometimes come to us saying that this is the amount of money I want to set aside for setting up a charitable trust, just for this purpose and that purpose, and they ask for our advice on those matters. So these are the benefits of using the trusts and foundations: holding of investments and assets of a family, and allow the founder, family members and professional managers to manage the investments and assets. For long-term holding and business continuity, for example, family trusts. For charitable or non-charitable purposes, or you can combine both objectives under one structure. For families to build family governance and ensure that future beneficiaries receive benefits according to a flexible distribution arrangement. So for example, if you use a trust or a foundation, and it is more to cater for the future of the family, so you put your wealth or your business under this trust, and you will have family governance, let's say headed by the founder and his wife, and under them will be the children, who will be the key managers and beneficiaries of the profits and income, and they will have dispute resolution mechanisms as well. They say, if this were to happen, this is how we resolve it. So this is part of the trust, and they can ask for some very detailed terms. If my sons or any of my sons or daughters were now in their teens, if they do go to university, they want to encourage them and give some incentives. They go to university, they do an MBA or something, then they are entitled for this. But for those who want to become musicians or film stars or whatever, then they will get this. So they can be very detailed, and sometimes they can also discipline the children, keep them in order by giving some punitive terms in there. So those are the contents of family trusts. So using these structures also helps to provide for advanced age, ill health and disability, emergency situations, and reduce reliance on costly and time-consuming probate or letters of administration applications. So like I said, the trustees and managers hit the ground running when something were to happen to you. Transfer of the benefit of investments and assets to beneficiaries confidentially in such proportions and at such times and to such persons as the founder or settlor wishes. Allows the settlor or founder to designate who to control the investments and assets. As you know, there's some of them are wary that their children are showing imprudent financial practices, and they wish to control this, and they will lay out detailed terms. All assets of the founder may be consolidated for ease of administration and accounting under one roof, and these structures can be used to minimize tax payments as well. So many of you, I think, have heard of a trust. This is considered one of the greatest creations of the common law, the Anglo-Saxon common law. It's a relation whereby property is held by a trustee for the benefit of one or more beneficiaries, created by this usually a high net worth settlor who transfers some or all of his or her property to a trustee who holds that property for the trust beneficiaries. separates the property's legal ownership and control from its equitable ownership and benefits. So many of them want to separate those what they own from their estate, so that when something happens, when something is no longer under your name and it doesn't crystallize into your estate, then you take it out of the usual legal framework governing the estate of the deceased. Trust can be structured to be fully Sharia compliant. So the Labuan legal framework enables a settlor to create a trust in accordance with Sharia principles, and these are the laws that will apply. I've laid them down here. So you can have a conventional trust, but when you talk about an Islamic trust, there's some additional requirements that settlors and their beneficiaries will want. So you have advice and approval from a Sharia advisor. You have to look at the nature of the trust assets. They must be Sharia compliant assets. So for example, gambling businesses cannot form the capital or the capital of the trust assets. Transfer of the assets to the trust via a hibah or a gift. So the Sharia Supervisory Council require a clear gift from the settlor to the trust. So removing those assets from his name to the trustee. The aims and management of the trust asset, there must be nothing non-Sharia compliant in its aims and its management. Investment parameters for long-term and short-term investments must be in Sharia compliant instruments or vehicles only. Terms of the deed of trust. When can a term of a deed of trust be non-Sharia compliant? So for example, we've seen some family trusts where it says, if my children were to marry someone from a different surname, for example, they don't like this, you could be excluded. So for Sharia compliant trust, these are the type of terms that are not acceptable. Beneficiaries' activities. So if you want to give something, charitable gift to an organization, the organization's activities must be Sharia compliant. So you can give to certain types of charities only. Channeling of any impermissible amounts arising from accounts and investments. So Sharia scholars say you have accounts, sometimes you have to open accounts, a bank account in countries where they don't have Islamic finance. So you have to open an interest-bearing account somewhere for investments in those areas. If they accrue interest, these interests will have to be channeled. So Sharia review and Sharia audit, the settlor can have in the terms, can have in the trust deed terms that from time to time, let's say annually, there is to be a Sharia check, Sharia audit of the operations of the trust to ensure that the income from the trust is fully Sharia compliant and it can be used and consumed in accordance with as required by Sharia principles. These are some of the features of a trust under Labuan. The Labuan law on trust incorporates many of the common law principles, okay, and it goes beyond it as well, giving it more flexibility. It also states very clearly that a Labuan trust validly created in accordance with the law shall be recognized and enforceable, and there is unenforceability of foreign claims or judgments when it comes to a Labuan trust validly created. Okay? Now, I think some of you have heard of foundations as well. Foundations are more well known as a legal entity or structure in what we call the civil law jurisdictions, not the common law jurisdictions. So it is like a company but without shareholders. It can achieve similar purposes like the trust, but their foundation is very different. When it comes to the trust, it is about the trustee holding something that is vested in him by the settlor in the interest of other people, beneficiaries, and he is held in check by very stringent laws on his fiduciary duties, and the court gives a very, very strict interpretation as to the duties of the trustee. The foundation, on the other hand, is governed by contract. So the relationship between the parties in what we call the charter of the foundation, and in the articles, it is laid out there. The officers of the foundation will have to implement the terms provided by the founder of the foundation and carries it out. So if the founder has transferred assets into a foundation, the charter says the monies, investments, channel it to this and this and this charities. This is what the officers of the foundation will have to do. So the trust is governed by the fiduciary duties of the trustee towards beneficiaries. The foundation is about officers of the foundation overseen by a foundation council carrying out the terms of the founder. They're just two different types of legal creatures, but Labuan in 2010 introduced both. So the foundation will be something of more of comfort for those who are from the civil law jurisdictions. There are laws on the trusts and foundations in Labuan, and there are additional requirements if you want to set up an Islamic trust or foundation, as I have said. For Islamic foundation, the requirements are the same, the additional requirements just now about the Sharia checks that have to be in place.